the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 16th day of March. My pleasure to be here. Very interesting session. The Dow is up 96. Let me run the numbers so we can get it out of the way. Dow is up 96 at, Dow is at 24,972. The S&P at this particular point, having been weaker than the Dow, is now kind of parallel. Dow's at 0.39, S&P's at 0.31, and it's at 2755, up 8. The QQQ series is the NDX 100 is really starting to fade a little bit here. It's down 35 cents at 171.17. Chart on the left is the daily. This is the weekly. I'll get to the monthlies in a moment. This is the 120-minute chart of the Qs. Made a peak E in the Chapman wave methodology at 175.21. We've got the IWM. This is going to be really fascinating because the IWM seems for a while now to be just in its own world. It is up 0.56, having held the 9-period exponential moving average at 157.80. It's making this kind of a double top-ish pattern in the weekly chart. And most importantly about this is that the MACD is still very strong. The stochastics at 80%, that's good. Above 80% is good. But it's starting to show a diversion between the price itself holding well, MACD holding very well, stochastics starting to show a little bit of a weakness with on-balance volume. Now, this is going to be very, so parameters are that 156 is really the area for the IWM to hold over the next few days. If you look at gold, very interesting. Gold here is down 5, down yet again in this arch pattern. What I'd said earlier in the week is that when I'm looking at a pattern that has a single leg A up, it constantly fails and takes out that left side. You remember the dreaded H pattern? When you take out the left side low decisively, you've got to be careful because it sets up weakness rather than strength. And now we're going to be testing it at 13.12 right now. Not only is that left side low of the 1st of March at 13.05, at 13.6, it's moving. 13.05.2, very important. But 1303 is the 200-period exponential moving average support, key support, and the MACD and stochastic aren't coming off a bottom. They're actually deflecting lower. This is not very good for gold. If you look at silver, same thing. It is closer to taking out that left side low. Not good action at 16.26, down 16. If you look at high-grade copper, also making this arch formation at HG, but it isn't quite as negative in terms of chart patterns as the others, but it has the same propensity to keep going down. Got to watch this closely at 310. 305 is the 200-period exponential moving average support. Now, this is going to be very interesting because crude oil, which was weaker a little earlier, is now up $1.10 at 62.28. If I'm looking at this correctly, the weekly chart is still demonstrating internal weakness. So I'm wrong if the crude oil chart in the next, make it Wednesday morning, give it 2.5, half a day today, full 2 days, Monday and Tuesday, and a little bit of the opening on Wednesday. If it hasn't taken out the high of the 26th of February at 64.30, but instead has stalled here and gone right back into the 61.50 area, that's going to say, ho-hum, nothing to see here. And that's going to be very interesting. Let's go to the TLT. Now, the TLT is making a peak C. This is the Lehman 20-year T-bond fund. I should say that at minus 0.38, the way that the yield rallies keep coming in quite strongly is suggesting to me that the reason why the home builders are acting so poorly, and there was a report this morning, I think it was, what, 7%, that's not very good. I'm just trying to find it right here. Oh, different mouse, different computer. Let me just find it. I think it's 7% we saw. Why is that not working for me? Okay, there we go. And what did we say? We said, in my Traders Corner for my newsletter, the opening call, I said in that summation of the first paragraph summarizes just about everything I've been looking at and giving all those charts out. This really gives you a one-paragraph summary of what I'm really looking at. And the housing starts were way off, I think down 7%. So that's really not a very good sign. So I'm watching this because there could be two whammies for home builders. That would be yields don't pull back very much. They're actually going to go higher over a period of a few weeks. Even if right now they're consolidating a little bit, you'll see that right here. Look, the weekly chart of the 30-year, the white one, TYX, made a high of 32.21 4 weeks ago, is now at 30.75. No big deal, but it isn't a leg beat to the downside on the weekly chart. You haven't even made a new low in the from the trough A, made in the 10-year at 28.48, 2.848. And this is the third week of the down move from a peak D. And this is just the first week. Actually, it's the second week of a very slightly lower high last week in the 5-year, the FVX, 5-year T-note yield. So this cluster formation here says that I think yields are going to hold a lot better, and we've got to be very careful. So let's just get out of this for the moment. Close workspace. Don't do anything else other than save it. Now I wanted to show you something very interesting. Within the TLT, you've got the TBT, which is the inversion, and the TBT is showing that it's made a trough C, but the MACD is still very weak, and the stochastic's trying to bounce, but still very weak. I would not be surprised if the 36.33 200-period exponential moving average support in the TBT will be hit. Now I want to quickly go to what I missed before, ESM 18. This is the June futures, the E-mini. Look. When I said to subscribers to my opening call this morning, every day I show the E-mini in the daily, weekly, and the 120-minute chart. I said this rectangle with an arch formation could be stuck in a range, and we could be in a range between the 2667 level and the 2747 level. And here we are at 2759, just going sideways. It looks fantastic if intraday you're trading, but overall, hey. Now, I want to do the Friday stuff that I wanted to be waiting to do. I'm going to show you as soon as we get back. I'm going to show you why I'm saying that caution is the sign for me right now, and I'll explain why. Be right back. Oh, we haven't even started the break. This is the first time I beat the commercial. 35, 34, 32. We're coming back very quickly. The Dow's up 100, S&P's up 8. A bit of a divergence between the indices. Now the Dow for the change is stronger. Boeing is a whole 9 cents. No, Boeing is up. Well, Boeing must be up. I haven't got it in front of me, but it must be up. I'll be right back after this very important commercial.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, we're back. So a couple of things going on here. Now I want to spend this particular segment, at least this segment, in going through what I'm looking at, why I'm looking at it, and what's really important at this particular stage of the whole process of January, February, kind of finishing up March here, the first 3 months of the year. What can we expect going into the second quarter? And within that context, what's very important for me, a couple of things. We spoke yesterday about knowing your style. So we're going to talk about style, knowing what works for you and where the difficulties are and what you're successful at. Interesting, after my show yesterday, I had a really nice email from Jim saying, Basil, listening to your show of 3:15, that's yesterday, you make great points on sticking to successful systems. I've been following your system and it's doing well for me. Biggest item is to identify and predict the trend and sector that will work. Use a time frame, 120 minute or daily for me. I'm now trading two times and 3 times moves. They're fast, so you need to lock gains quicker. Of course, when straight up, no blinks, all look like heroes. Market like now is where you make it. Getting closer to full-time trader versus working a job. You know, Jim, that's one of the nicest things that I could hear. I know that we worked together in Master Trader Series before. Hadn't heard from you for a little while. I was hoping things were going well. I'm really pleased they are going well. So let me talk about this. Within the context of the techniques that I talk about, within the techniques of time frames, etc., to make it really simple, the Chapman Wave abbreviation is CW. In its simplest form is you try to identify the most obvious lowest low bar, and you always got to go a little bit back to see that you have identified. You don't want to start the count and then all of a sudden you move back and say, oh my goodness, that's a B, that's not an A. So make sure you pick the right low bar and then count each successively higher peak. The simple way to think about it is at least 4 peaks higher is where things happen. So alphabetically uppercase on the way up, A, B, C, D. D is where other things can happen. It could just continue up. But that's where sometimes you get your biggest turns to the downside. So other things can happen. That's where you need to either raise your stop on part of your position, or if that's your swing position, just take your profits. You can always come back in. Other things can happen, and that's the way you have to deal with it. It can go to E, F, or G. It could have an instant restart. I'm going to talk about that if I get a chance in a short while. So here we are. We're at the E-mini, made a peak D at the all-time high on the 29th of January, I'm sorry, and pulls back very sharply, goes to the 20-period simple moving average, bounces, and where are we now? We've made another peak D, much lower than the previous high. It's at 2807.25, but we're hugging the 9-period moving average. The MACD is not anywhere close as good as it was the end of January, but it's still positive. The stochastic is already quite weak at 71%. So is the unbalanced volume, the blue line in the daily. The weekly, it has very poor technicals. The price has gone more than a 50% gain. It had, but now it's at about just over a 50% gain at 27.60 from the low that was made at 25.32. And the 120-minute chart, as I said earlier, is making this sideways rectangle pattern that can last a lot longer than your patience. So now let's get to the nitty-gritties of what I want you to do. Within the Dow, we've made our second peak D, just as we did in the E-mini. We made a peak D on the 26th of January at 26,600, come down to the 23,300s, 12% decline, has a huge move up to 25,800, but not good enough. Goes sideways, but still within this rectangle formation pennant with a rising trend line and a declining trend line, and it keeps bumping into the top and bottom of these rising price moves to this apex that should be coming up within a couple of days. And now what we're looking at is even over the last 3 days, we've held this dashed pink line to the upside. The MACD's flat. It's okay. It's really not good. It's not bad. It's just flat. Actually, it's a negative overall, but it's holding the fast-moving average. Green line's holding okay. The stochastic's very poor. The weekly chart has this H pattern, lowercase h, that I keep talking about, the one that's drawn in the daily chart. That's in the micro. That's the macro for the weekly. Monthly chart has just got one candle that says, well, watch out if such and such happens. What's the such and such? It's a weekly close below 24,200. Then you're in trouble for the next bar, which if it's this month, it's this month. If it's next month, it's next month, meaning you should be going down to test the low that was made in February of 23,360. The S&P, same thing. I don't want to go through the whole, it's just the same thing. It has made a second peak D after the first one. Watching it closely, nothing here. It's the same as the Dow. The QQQs were the strongest. They've now made that peak D at 175.21. The last one was a peak E, made a D, and 2 days later it went to the E at 170.95. Pulls back 18%, and then it explodes even higher and goes from the 170.95 high of January to 175.21 of 4 days ago, the beginning of the week. Now the MACD is turning down, but it's not negative. I still can't put a plus sign there, and the stochastic is negative at 75%, as is the on-balance volume. The technicals show a divergence, but the price is holding above the 9-period moving average. The weekly chart went to a higher high, closed for the week higher than the 170.95 of the week of the 26th of January. That is a positive, and it says that you probably are going to go down all the way to the bottom at 150.13 here. But be careful, because if over the next week, especially if on Friday a week, it closes below 169, that's just saying, uh-oh, here's a problem. Monthly chart is still very good. That's the Qs. Yes, we are short the Qs from less than a point off the top. Not the issue that I'm talking about. I'm only talking about chart formations right now. So let's just go on, because this is going to be very important. The IWM I spoke about earlier, I'm just going to do it really quickly as to say it made a peak E. I can't put a down arrow because it hasn't even closed once under the 9-period exponential moving average. And the weekly chart has this failure on the right, a potential right shoulder failure, because it hasn't gone above the one. Hey, why didn't I type that in? 160.63 high of 160.63 high. I believe that is of January. So whatever it is, that V-shaped pattern If this MACD deflates lower, this thing is going to go down. If it closes under 155 at any point in March, that's very negative. So far, holding okay. Monthly is actually not bad at all. Now we get to the nitty-gritties. Why am I kind of nervous here? Adobe, one of the most fabulous stocks on the market, went to a leg D this month. I extended the leg D in the monthly chart, has a leg D in the weekly chart, and in the monthly, the technicals are very strong. In the weekly chart, the technicals are very strong. Haven't even started to turn down, but the stochastic is just about to turn a little bit flat at 95. Hey, there's nothing wrong with that. This is the issue. Adobe spiked on a Friday to give you a leg D, and how it closes today and how it fills the gap next week, if it does, is going to be absolutely important. I'm going to go through a couple of very important stocks that I look at in indexes and explain to you why I'm a little nervous here.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone. Let me just do this. Fill this in here. I want you to see 1 second. Got it. Okay. So the reason why I want you to do this right now is if I can just set it up, I'll have it all ready for maybe the next break. We'll see. But in the meantime, I just want you to get it ready. Oh, I can actually slide it like this. Yeah. So this is my newsletter. So this is the Traders Corner, the part that comes out every day at 8:35. So basically what I do is I show the Dow, the diamonds, every single day. I show this with the pattern that we're looking at. It's an educational thing, show what we've done. I usually like it to keep it as clear as possible, so I get rid of the things we were short off the top that was made. A few hundred points off the top at 26,600, and then we covered down at the bottom, had a nice gain. They actually went long 2 days, the day after the low was made, and then we got stopped out with a profit after that, and then was the pullback and the bounce. And yes, we are short again, but that's not the issue. What I wanted to say is, although I spend a lot of time every day on my charts, because that's the way I feel. I've got a seat of the pants approach. I've got automations and all that, but I still want to do the work myself. You know, it's just to get the seat of the pants thing. So the Trader's Corner, what I said is for today, caution remains. Finally, we might be seeing the expected reversals from peak Ds and Es in the daily SMHs, that's the semiconductors, the XLK, that's the S&P tech sector. Heck, that's the cyber still has to make a new high, so that's out right now, and we have to wait for next week. But even outstanding Adobe, ADBE, is about to gap up for a leg D on a Friday, no less, to an all-time high. Just as I was looking at triple D, DDD the other day, I was still as a buy, and it wasn't doing anything. Then it spiked higher, so we kind of missed it. But this is 3D systems, that's 3D technology, printing. And that gapped up on Thursday to a leg E. So now these are very important stocks. And Square, same sort of thing. Well, I'll go through them in a moment. And Square is in leg F. And it looks like there was a doji candle. It's going to struggle a little bit here. We're going to be watching this very closely. Now, what is the NOW? I should know what it is. I followed all the time. Made a peak E, and it's on a slide watch. But a stock that I showed as a featured stock about a week ago, BXP, and we were about to go long, and then I said, you know, I'm just going to lay off right now because we're looking at other things. Actually ran higher, and it went to a peak D. That's Boston Properties. So this is what I do. I give a summation. I talk about PHM, which Pulte, we have as a Pulte group, we have as a short, still short from the 33.5 area. It took very nice profits. The remaining portion at 33.5, we're talking about a stock that's now 29.30. So this is what I do, a summation, and then I go through the diamonds, you know, what the positions we have, some things we don't ever trade, but I put it in because GDX, rarely do I have the GDX, but I put it in as gold in the dollar. I give a line here. So if you're interested in this kind of IBB, I give parameters. If you're interested in this kind of format, where every day you're looking, you have a real quick look at what's going on, plus the positions we have, and all you have to do is maybe change your stops in some things, or look to short or buy, whatever it is. Check out my opening call. I think you'll find that it's a lot of information, hopefully very valuable information. Even here, we've got the 10-minute, where we talk about peak Ds and Es. There's your peak E in the 10-minute E-mini chart. And what does it do? It goes right to this important green line, which is the 200-period exponential moving average. Now, let me explain what I was looking at. So Adobe's gapped up. The MACD's starting to flatten out a little bit. Huge volume. Now, we might see the thing that I talk about very often is a climactic low reversal volume bar. And that sometimes says that when you get that, you can have at least 28 bars on the upside before you come and retest the low that's made, because it's an emotional thing. Now we're going to see if we see the opposite. I haven't seen what the full volume is. We'll check out the volume. This is where I use volume together with my on-balance volume and try to put it together. But this is where Adobe, a fabulous stock, is starting to look like, hey, it might have run its course right now. And even if it consolidates, it's got fabulous at 224. It's got fabulous support in the 215 to 210 area. So you know exactly where it is. If you're looking to go long and you feel like me, darn, you just missed this as a fantastic position play. We actually missed it a while back. It was brought to my attention when they took over. They bought out Tube Mogul. So this is something that I've missed. I'd like to put it on my watch list, and that's the way I'm looking at it. Let's look at Square. Square now, I think, is a really important stock because it's right on the cusp of modern technology where people can go to their flea markets or whatever it is, and they have the most current, most up-to-date payment system. Square Inc. point of sale software and managing receipts. I think that's fantastic. Maybe we can talk about shorting these things, but more importantly, where would we buy them, since this is a state-of-the-art technology? So this is what I'm trying to do for my subscribers for what I call the next phase. And how we resolve this particular phase, we'll know within a few days, I think. I'll give parameters in a short while. So Square is on that list. Now is on that list also. Technology, cloud computing, light speed, leg E in the monthly, leg E in the weekly, just made a peak E in the daily. And I mentioned that we've been following it for days. You'll see in my newsletter, I said, right here, every day we've been watching it, and I've been talking about it as right here. I don't want to go too far down. Right there. Now, peak E daily, watch with Adobe and Square here, near slide. So I set things up so that even if we don't get it, if you independently are doing your homework, you can maybe use it here and say, oh, look at that. A great stock, one of the best in the market since 2016, goes from 45 to 100, and what was the high? 176.56 2 days ago. Keep it on your watch list. So I'm trying to build a watch list at the very same time that I'm also looking for potential shorts and potential longs, shorter term or intermediate term. So, all right, I just wanted to go through those things and tell you why I'm looking at the XLK, the Qs. These are all sectors that are saying to me, what happens over the coming week, the parameters that could be hit either upside or downside are probably going to tell us what's going on for the next 3 to 4 weeks. So what I'm saying is XLK, this is the S&P Select Tech Spider Fund. Still the monthly is incredible. I've only got a leg C. I just can't count it any other way. Weekly D and a peak E already in the daily, but I still haven't been able to put a down arrow because it hasn't closed below the 9-period moving average. The MACD is still good, the stochastic still good. So you can see that I'm trying to be very methodical, very thorough. If I miss something, I miss something. What can I say? We're only human. But at the same time, I like to set it up so that we know what we're looking at and why we're looking at these things. So if the XLK takes out in the next week, closes at 69.69 right now. If it closes, give it a little room. Under 68.50, that's almost like a one-to-one where this is a propeller shaft. That's saying, uh-oh, be careful, because this entire 68 to 66 area then becomes a target. If, in fact, it rallies to the 70.80 area, a point and a little bit above here, I'm saying, okay, give it a little time. It's still looking a little choppy. Just give it time. I'll be right back to talk about bonds. We'll be right back in a moment.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Yeah, I was asked about the chart for Adobe. So here it is at that peak C in the daily, weekly and leg D, 120-minute chart in here. And I said the whole reason why I came about the technique of the Chapman Wave instant restart way back is because I kept getting these moves that went to a G, and then there would be a pullback and a sudden up spike, bars and bars later. And that up spike, I would say, oh my God, this is now a new leg, A or a B, and that's very exciting. And then it would fail and break down way below the trough that was made of importance in the U-shaped pattern, and way below just before that peak G. And I couldn't, there I was getting aborted A's and B's, and that's just, it doesn't happen in this Chapman Wave methodology. And then I found the G to the C can sometimes take you to the D, and then you've got to be careful. Wait a minute, isn't that what we've got right here? Are we going to go to our caller right now in Adobe? Yeah, there it is. Look, this is exactly what I was talking about this morning. So this is probably now a D rather than a brand new B. But to be careful, I have to put a D. That resolves one thing with the instant restart. And it says gap up on a Friday to a D in both the daily and the 120-minute chart. It better not break from here. It has to make a new all-time high above the high of 228.88 just established today. Otherwise, it's going to fail. Not break down, but fail. I'll be going straight to my first caller. We've got Greg from Austin. Greg, how are you?
I'm well. How are you?
I'm very well, thank you.
Good. Hey, I'm calling on the TNX. I know you look at the weekly rate every day, but I'm looking at a shorter time frame daily rate.
On what?
The 10-year note, the TNX.
Oh, yeah, okay. Let's look at it together. TNX, right.
Yeah.
So the TNX...
The reason being is I need to lock in a 30-year mortgage here pretty soon. And I was wondering if it might break through that left side low on March 1st. That's kind of what I'm watching.
Okay,
and
so there are a couple of things.
Move a little lower, because I want it lower, obviously.
Okay. Yeah. Well, what is the rate that they're talking about right now? The rate that they would give you?
What rates?
Yes.
The 30-year right now is right about 4%.
Really? Okay, so it was at 3.5 about a year ago, I think it was. So it's moved up quite a bit. So, folks, this is what we're looking at. If I'm looking at the TNX this is the 10-year yield, and the 10-year yield is really what a lot of rates are they're defined by this particular instrument, not the 30-year, but the 10-year, and 5-year does something else as well. So what I'm looking at here is that there's been a very steep decline in the MACD in the daily and a pullback to 30% in the stochastic and the daily, and yet the price is just desperately trying to hug the 9-period moving average. Whether it goes above or below, it keeps coming back to that. So I'm going to say to you, when is your due date? When do you have to make a decision by?
Well, you know, we're working in that process right now, and, you know, I could be able to put it off for about 2 weeks. But, you know, currently I'm looking anywhere from, you know, about a month to a month and a half, but you have to lock in at least a week prior to give them time.
Don't you have the choice of locking in the rate until you sign, and when you sign, if it's lower, they give you the lower rate?
Yes. So I have about a month to make a decision as to lock in. When I lock in, I have about 30 days.
Okay. So I don't think that within the 30, this is my, you can't rely on one person's point of view. But what I am saying is, based on the MACD and the stochastic, based on what I'm looking at in the builders, the home builders, based on a lot of factors that I think are kind of important, at least for my way of looking at this right now, the way the monthly is held up so strongly, the way the weekly, even after all this noise, is still at 28.52, I'm going to suggest that in the big deal is going to come in about 2.5 to 3 weeks, when I think that the TYX, let me just double check this is important. Yeah, the TYX, which has made a peak C in my weekly chart, and it's got an overlapping wave, and that almost, I don't know about yields, but most in stocks, when I've got an overlapping wave, there's just a really good chance that it's going to go to a D. Just, I mean, 85% or even higher chance. So I can't say that that's a guarantee with something like a yield, because yield has to do with emotional and technical and all sorts of things. But from what I'm looking at, by the week of the 6th of April, I think that we could be testing, the yield could be pushing up a little bit towards the 31.72 level on the 30-year. So that's just the TNX, which usually leads. Actually, the 5-year is already what leads. Should be moving up. I'm going to make the suggestion to you that if you're able to, are you able to lock in right now, or you have to finish all the paperwork?
Well, I think I'm within a week of locking in, because they give you a month window. So I need about another week.
So, but is that lock? Because as I recall, for someone I helped doing this at 3.5%, I think that the lock was a lock that until the day you actually sign, that where the mortgage goes through, if it's a little lower, they can change it. But maybe that's not the case. Maybe this is your final lock, and up until then, you've got. I think the difference is going to be 0.02 or 0.2. So it's either 4.2, maybe 4.25, or maybe 3.95. I think, in fact, I don't even think they'll change the rate that much on your mortgage at that particular time. I'm thinking that this is a good time to be locking. Now, I have to also talk about a market downturn. If there is a market downturn and conditions force folks to go from the risk in equities to the so-called safety of bonds, that could change things, and that's where we would see another sharp decline in yields. So, wow. You know what I'm going to do? We've got a break coming up. There are a couple of things. I wanted to look at junk bonds. I need you to look at a couple of different things, because your lock right now is going to be for a long time. And it does make a difference, even a quarter of a point over a period of time. You really want to get the best deal you could. And if I'm going to help you, I'd like to help you under the best conditions. So let me do this. Are you able to hold on? The break's going to be coming up. I'll show you what I want to look at. I want to look at junk, which is JNK. This is the Barclays Spider This is the, what they call it, a fund, high yield bond fund, and it's trading at 35.96. It's coming off a bottom. Will it rally? I have to make, all right, let me do a little work during the break, and then I'll try to give you the very best that I can, and then it's going to be up to you. So, Greg, hold on.
Thank you.
I'll be right back.
Thank you.
Okay. Folks, we've got a break coming up. Dow's up 146, S&P's up 11, and we'll be right back.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earn me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Hi, folks. So we're on with Greg in Texas, Austin, Texas, and we're looking at the TNX 10-year, which is really some kind of a guidance for a 30-year locking in a mortgage, a 30-year mortgage. So this is what I'm thinking. I believe that the yields at this particular point could stay higher, but with the housing starts coming in as they did today, I'm not sure that the Fed is going to be overly enthusiastic about raising too much. They might raise another quarter point. And I think that the mortgage companies, I don't think they're going to all rush quickly to raise the rates. They would prefer to keep it as low as possible.
Well, that makes sense.
You know, I'm just thinking that within this 4%, considering what yields have done over the last year, gone from maybe 3.5 to 4, that's still really low. I mean, you know, you're talking to someone when my first mortgage and then my second mortgage, we were talking up in the high teens. I mean, we're talking serious stuff. So this is, it's kind of slight. It's not slight in numbers over a period of 30 years, but really compared to what it could be, If it jumps into the 6-7% area, that's a big difference. I'm going to say, think about locking it in this particular time frame. I think you're really talking about a quarter point either way. I don't think it's going to make all that much difference in the end. So I wouldn't be fussy, but see if you can get lock it in with a choice before you close of being able to, whatever it is, if it's to your advantage, they let you do that. But I'm thinking this is kind of the area.
Hello?
So I hope that helps you a little bit. And I'm looking at the financials. They kind of stalling a little bit here, and that's saying to me, yep, maybe rates just shorter term are going to be kind of stuck. So if you want to even hold off over the weekend, we can talk about it again, maybe Tuesday or Wednesday of next week. But I think we're in this area, somewhere around here.
Well, your thinking is a lot like mine right now. So, yeah, I mean, it's close enough. It's just a cup of coffees a month. But
I know. That's what they always talk about, except the coffee's getting very expensive. Well, good luck.
Right.
Thanks for calling,
Thanks
Greg.
so
Let
much.
me know what you do. Thank you.
All right.
Folks, I was
Bye-bye.
asked about FEYE, which is Fire Eye is trading at 17.93. This is another stock that gapped up on a Friday with earnings. It hit 18.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.